Welcome to Bunnex Investment Group. In this video, we will talk about a simplified London session strategy. This can be applied by any type of a trader, whether novice or even professional. Be sure to be part of our free signals Telegram channel. I'll leave the link in the description box below. I share free setups as well as signals in this particular trading channel. So by the end of this video, you'll be able to actually catch entries on these particular points in the market flow. So these entries have the probability to give you 100 pips depending on the pair that you take. They can allow you to get the so-called sniper entries within the market trends. Here is another example of the trades that you'll be able to take. You'll be basically locating this best entry and exit after 50 to 100 pips depending on the pair that you've taken, best entry and exit like that. So this is simple and actually has easy steps to follow to get these particular entries. Firstly, we need to talk about sectional behaviors. We have three main sessions in our trading. Of course, in the trading context over the internet, there are a lot of sessions that they talk about. But the three main ones are Asia, London, and the NY session. In each session, the market makers have different objectives. The market makers who drive the market in the Asian session are different to the market makers who drive in the London session. The Asian session is the opener of the trading day, meaning when we are starting off the trading day, we actually start off the Asian session. For this strategy, it gives out the short-term bias of the market, which we will use in the Asian session. So in short, we are saying the Asian session is actually the opener of the trading day. And within that Asian session, we get a short-term bias that we will use in the London session. The London session, which is where we will place our trades using the strategy in subject, issues long sustained run. That is where we actually enjoy the trends of that particular day. The NY session reverses the war run and ends the day in consolidation. So basically we are saying the Asian session is a phase where the market consolidates to accumulate contracts, and then after that Asian session we'll have a long sustained run in the London session, and then the US session will pull back and end that particular day in consolidation. So how do we enjoy this ride? That is what we are going to talk about in this video. Here's the Asian session bias set. We employ two EMAs, which are the 13 and 50 EMA. The main rule of this strategy is to see these two EMAs cross each other. Therefore, we need to see the 13 EMA crossing the 50 EMA to set the bias. When they cross to the downside, it means the short-term bias is equal to sell. And when they cross to the upside, it means the short-term bias is equal to buy. Let's have an illustration of this arrangement. This blue box marks the period equivalent, or the period that is the Asian session. The Asian session usually comes from the day changeover of the international market timing. So you need to consult your broker to see when they place the Asian session in your trading. In this particular case, the Asian session was not trending as we always expect it to. In this case, we can see a 13 in red and a 50 EMA crossing in the upward direction. And this will actually give us a market bias or a short-term bias of upward move or equal to sell. So after seeing this, the next step is what is important. The London entry. The Asian London session changeover comes with a fake move to induce traders in the opposite direction. So market makers are sophisticated traders who needs to introduce liquidity for them to actually fill their orders. So between the Asian and London, they actually issue a fake move as a way of inducing traders in an opposite direction they intend to reverse shortly. This fake move can be easily governed by the 50 EMA the one in blue. Therefore, the strategy states that when a 1350 EMA crossover occurs in the Asian session, expect a 50 EMA bounce in the London session and enter. I'll repeat that again. When a 1350 EMA crossover occurs in the Asian session, expect a 50 EMA bounce in the London session and enter. Let's have chart examples. In this case, my Asian session is marked in white. So I'll be removing the Asian session so that you'd see a clear crossover of the EMAs. In this case, which is the first one, I have removed the box so that we can see that the crossover occurred at this particular point. Let me zoom it in. We can see that after this crossover, we had a short-term bias of sell. After that, we will expect to see a pullback in the Asian London session changeover. In this case, this was a changeover and we call it a gap time. During this gap time, the market makers made a green candle as a way to induce traders to the upside so that they can take out their stop losses during the London session long sustained run. In this particular case, we had a candlestick reversal pattern which we call railroad track, which is red, green, and red, and our entry could be made. So this is following the concept that we have laid out on the slides, whereby we say a crossover of 1350, if it happens in the Asian session, we have a short-term daily bias, and pullback to the 50 is where we make our entry. On this day, there was no opportunity. Why? There was no crossover in the Asian session. On this particular day as well, there was no entry because there was no. Right, so the foremost or the important thing that I always say is you must be disciplined and patient. As you can see from the entry point that we had, we actually stayed for 3 days before getting another entry. On this particular day, let me remove the box. On this particular day, we had a crossover of the 1350 EMA in the Asian session, and that was to give us a short-term bias of sell. The market came back to the 50 EMA. In this particular case, we were now looking for a candlestick reversal pattern which actually occurred within these rejections. Someone could actually be able to be patient up until he got this railroad track, but all these candles were actually valid candlestick reversal patterns to enter short. You enter short, and if your pair has a wider volatility, you would actually be able to pocket 100 pips or 50 pips for the day, and you are done. Let's go further. We can see that in this Asian session, we had another crossover which was issued at this particular point. A crossover, drop, and then retest of the 50. That is where we could make our entry. So basically, we are looking for crossovers of this 50 EMA and 13 EMA in the Asian session, and then we see a flow away from that Asian session range. Then our entry will be in London, whereby we get a bounce on the 50 EMA, basically like that. Like always, I say, for you to make money, you need to be patient and never rush the market. You need to be patient and disciplined to wait for the right point of entry. On that note, we come to the end of our video. Thank you for watching. Like and subscribe, and I'll see you on